about the frequently asked questions about income tax, and we have got our wonderful tax expert from our tax panel here today. His name is Tembani. How do I pronounce your surname?
Tembani Mdam.
That was too quick. What was it?
Tembani Mdam.
Done. Okay, there we go. So Tembani Mdam is going to be providing us with answers to the questions that we all really need to know, because tax season has opened. And my dad, what can we expect this tax season as opposed to last tax season?
So there hasn't been much of a change, really. The only notable change thus far is the auto assessments. Because remember previously, it's been 2 years or so that SARS has introduced the auto assessments.
Auto assessments.
Yeah, but previously you had an option to accept and edit those auto assessments.
Yeah.
But now they come through. There's no need for you to accept.
Oh.
Yeah. So if you're happy with whatever they assessed you, then you leave it as it is. But if you're not happy, as most people would be, then you can edit that return.
Yeah.
But the only difference now compared to the previous years is that there's a time frame that you can do so. So they have set a 40-day time frame. It's a statutory time frame. So if you take too long from the date of the assessment, then you can't object. I mean, you can't correct that assessment.
And 40 days disappears quite quickly when you're doing things. So that can be definitely something to diarize, I'd say. But I'd say our first main question is, who needs to register for income tax?
That's a good question, because most people ask that question. Really, who has to submit, who has to register as a taxpayer?
Yeah.
Well, the answer is quite simple. Everyone can register as a taxpayer. If you have a need to register as a taxpayer, you can register as a taxpayer. Well, if you're employed and earning a taxable income, definitely you have to register as a taxpayer. If you have prospects of earning an income, you can register as a taxpayer. Any natural person or any juristic person can register as a taxpayer. And they've made it easy for you to register as a taxpayer recently. So it's not much of a hassle. It's a simple process, really.
That's good. I think that actually puts a lot of our minds at ease, because I suspect that for a lot of people, the idea of registering for tax is a little bit intimidating.
It is, because remember, previously you had to go to the SARS branch, right? And
that's enough to scare most of us.
Going in there, staying the whole day in the queue,
yeah.
It's enough to scare most people away. But now they made it easy, because you can do it online. When you register your e-filing profile for the first time, automatically you get a tax number. Or if you're employed, it's very simple. Your employer can just do it for you.
I think most of us rely on the fact that our employers are going to be doing it for us. So obviously there's registering for tax, but what is an income tax return?
So it's a term that most people throw around. What is an income tax return? So your income tax return, well, most people are employees, right?
Yeah.
You get a salary from your employer, or you get income from your businesses that you might be running. So your income tax return is a declaration of that income. So you would have had income throughout the year. Now on assessment, you have to declare that income. So now your income tax return is a declaration of that income. So a declaration of your employees' income that you earned during the year, or your income from whatever source that you earned that income. So that declaration, it's called an income tax return.
Okay, and you obviously only do that once you've registered for tax.
Yes, once you register on assessment. So another term that you see, they say income tax return, but some would say it's an ITR 12. Is it?
Yes, I've seen that.
So the difference there, because there's an ITR 12 and ITR 14.
Yeah.
So an ITR 12, that is for individuals, right? And then ITR 14 is for businesses.
Yes.
So
it is interesting, because when you go on the SARS website and you start looking for things and you find information, and then you see all of these things that have like alphanumeric values. So you've got IRT 12 or IRP 5, and you go, I need to understand code breaking.
Just simple codes, just to make it look fancy.
Yes. And I really realized later it was like IRT 12, income tax return, or ITR 12. income tax return for 12-month
for
period.
12-month period, easy like that.
I thought it was so cool, and I was like,
Yeah.
I'm sure everybody else figured this out before me. So once you've registered for tax and you know what a tax return is, do you need to submit, well, how do you know that you need to submit an income tax return?
So that's a good question, because most people ask themselves that question. I've seen most people that employees, permanently employed, earning income, but they'll tell you, I've never submitted a tax return because I don't know if I'm supposed to submit a tax return or not. So, well, if you're earning a taxable income, we'll talk about this later. If you're earning an income above the tax threshold, it's always advisable to submit a tax return.
Yeah.
Right. But now what's confusing is that SARS has said, talking about those thresholds, SARS had said previously, they've raised the threshold from 350,000 rand to 500,000 rand. So most people, they end below that.
That's quite a high level, yeah.
So most people will be reluctant and say, but I earn less than that amount, so I don't need to submit a tax return. But it's always advisable to submit a tax return. One, if you have submitted before, just for continuity, it's always advisable to do that. And even if you're below that tax threshold, it's advisable for you to submit a tax return. Because remember, you submitting a tax return, you're reconciling what your employer tells you that this is what I've submitted to SARS. Now you're reconciling with what SARS has.
So you're also checking on your employer.
You're checking on your own. Yeah. Now, if there's a discrepancy there, if your employer overtakes you, for instance, because most people, they submit because they want a refund, right?
Yes.
So if your employer overtakes you, for instance, then you will get that refund. So it's always advisable, even if you're not obligated to submit because of that income threshold, but it's advisable for you to submit a tax return. What do you have to lose?
I think that's an incredibly valuable point, because for a lot of us who have either come out of permanent employment and then been a contractor, there are those concerns of, well, I don't earn above 500,000 rand a year. Should I really submit a return?
Yeah.
Is this kind of worth the worry? But as you can see, it really is worth the worry.
It is. And another thing, what you've realized, in our forums, people always say, SARS is very hungry. So, what they've been doing.
Hungry caterpillar.
They are. Because what they've been doing recently, even if you're way below the threshold, they'll still penalize you,
But what are they going to penalize you on?
So, and leave the honors to you to prove that, well, I was below the threshold, I wasn't liable to. But now look at that administrative for you to, it's costly for you to explain and say, but I wasn't liable to submit. So rather submit.
Rather submit, rather cover the bases. So that's terrifying, actually. Thank you for that little nightmare this very fine afternoon. Yeah. So when does the tax season start, and when can you start submitting these returns?
Well, it's already started.
Yes.
We've already started. Most people, I'm sure some that have joined us here, have submitted or planning to submit. Started on the 1st of July.
The 1st of July, yes, that's finished.
So we're well in the tax season. But now they've made it shorter, so it's going up to the 24th of October.
Okay, is that quite a bit shorter than last year, or am I?
It's a bit shorter. It's a bit shorter than last year. If I'm not mistaken, last year it went up to September, November, somewhere. If I'm not mistaken, it's tend to be correct.
Okay, well, it's good to know that the tax season is shorter, because I think a lot of people will put off doing what needs to be done, and
then you get on it.
It sneaks. So how then do you actually submit this tax return?
All right. So you'll notice that I want to talk about the online periods. I ignored the branch periods because going to the branch is a hassle. So submitting your tax returns, the most common way to do it now, and the most encouraged way to do it, is doing it online via e-filing.
Yeah.
Even the SARS, go to the SARS and they will advise you to do it online, because it's the most convenient way of doing it now. So you register yourself on SARS e-filing, get an e-filing profile. That's the best way to do it. Well, if you can't do it for whatever reason, then you'll have to go into the branch, book an appointment, and go through all that.
And suffer the horrors of them.
Alternatively, you can come to us.
Well, I mean, there you go. I think that's probably one of the most attractive aspects. I think most of our attendees are our clients.
Yes.
But I think one of the things that obviously is a benefit for our clients is the fact that you are saved the horror of going anywhere near a SaaS branch. So I think we need to probably speak to marketing and ensure that that is included a lot more in our tax comms.
It should.
But with e-filing, I mean, is that something that SaaS encourages now?
Yes. In the recent years, that's what they've been encouraging.
Yeah.
I remember 2 years back, when someone would go to the branch, the first thing that they would do, they'll first assist you. They had consultants dedicated to assisting you registering for e-filing.
Oh, so they'd register you in branch?
They'll register you in the branch. So they said, no, don't come to us, do it yourself there. Yeah?
That is very reassuring, actually.
Yeah.
So do I need to pay income tax? I think is another question a lot of people ask. It's like why or how much, but the big one really is, do I need to pay?
So, well, for most people, you find that you do have to pay income tax. It goes back again to those tax thresholds that we talked about. Right?
Yeah.
Most people that we're talking to now, most people that have joined us, are salaried employees. Right?
Yeah.
So most people that are employed, they do pay income tax. They have to pay income tax.
Yeah.
Again, I have to go back to those tax thresholds.
Yeah.
So depending on how much you earn in the month or the year, you do have to pay tax. We'll talk about those tax thresholds.
They're coming up shortly.
Those that will determine if you do pay tax. But normally, yes, you would have to pay tax. And you should be happy that you're paying tax and contributing. You should. You should, yeah.
I think it is quite a difficult thing because obviously nobody wants to part with their salary, but there are obviously, there's a reason that we pay tax, and it's very important for us to kind of make peace with the fact that we do pay tax and we have to pay tax.
We do.
So it's one of those 70s in life. So examples of income that an individual may receive and what determines that taxable income. We've got a few here. I see I have papers readily available, so I'll just read through them quick.
All right.
And then you'll give us your opinions.
No.
So examples of income that we would, that SARS would be interested in. So remuneration from income from employment, such as salaries, wages, bonuses, overtime, or your overtime pay is taxable. Fringe benefits, allowances, and certain lump sum benefits. Profits or losses from a business or trade. Income or profits arising from an individual being a beneficiary of a trust. Directors' fees. Investment income, such as of interest for foreign dividends, such as interest on foreign dividends, my mistake. Rental income or losses. Income from royalties, for those of us who have started our TikTok channels. Annuities, pension income, and certain capital gains.
Yes. So you realize from what you've covered there, I like the first 2 points. So you talked about salaries, wages, and bonuses over time.
Yeah.
And the next one was fringe benefits. So there are situations where you get an individual who will say, but I earn less than the tax threshold.
Yeah.
Now they'll be referring to their basic salary. You find that say maybe earning a basic salary of say 7,000 rand, that's below the tax threshold. No tax should be deducted there.
Yeah.
But now you from the list that they talked about overtime.
Yeah.
Right. So now adding your overtime, it takes you way above the tax threshold.
Ooh.
Right. So now you have to pay tax. Or in addition to your normal salary, you find that you've got these fringe benefits that you talked about. You're getting a car allowance, you're getting incentives and all these things.
Yeah.
So now that takes you above the tax threshold. It attracts tax, so you have to pay tax there.
Ooh,
so
tax is a phrase I don't hear.
Yes. So the way the Income Tax Act is structured is such a way that they try to claw in all these activities that you might have. So be it businesses, be it your TikTok.
My TikTok.
Yes,
Yeah.
the TikTok is always watching and ready to claw.
This is hungry caterpillar, now has claws. This is a very interesting creature.
Yeah, so it's really important to have an advisor or someone that you will talk to say, hey, these are the activities, activities that I'm engaged in. Earning money from this and this. Now, do I pay tax on this? Because really, at times you sit back and think, no, this is just a side hustle that I'm doing.
Yeah. Sounds like your side hustle. I'm sorry. There might be those other entities that are up for the candles and the battery powered lights, and others for your side hustle.
Yeah.
But I think it isn't one of those things that obviously we as human beings, we like to not necessarily engage with the elephant in the room, which is, well, if there is excess income, which I think a lot of us took on during lockdown, we really did try and find new and interesting ways to make a bit of extra cash. It's like some of that really is actually going to be taxable. It's going to be taxable income.
It is. Because remember, I'm sure you've seen from your banks each and every year they will give you a tax certificate.
Yes.
Right? To say this is the amount of interest that you earned in the year. Yeah. Remember, your bank is a reporting institution. So your money going into the bank, naturally your bank should report to SARS that so and so these and these activities and this much money. Now, if you're not declaring that and not paying income tax on that, SARS will come back to you and probe it. So it's always important to have an advisor because there are different activities that you might be engaged in where you have to pay income tax. And
would what you have to pay on each of those different income opportunities change depending on what they are?
Not really depending on their nature. Well, the treatment, the nature, it comes into play, but it all depends on how much you make of it. And that's why you need a tax advisor. Yeah.
Look, I need a tax advisor. I have you.
Lucky you.
Right, and modest too. Okay, so let's talk about these tax thresholds a little bit more in depth, because I think a lot of the time we hear the phrase tax threshold and we think to ourselves, what on earth is that? So where do they actually start?
Okay, so remember we talked before about the tax thresholds. Those are determining factors of if you do have to pay income tax. Those are the limits. The limits that are set. So they are age dependent. So your age determines your tax threshold. But there are 3 age groups just to keep in. So me and you really shouldn't really worry about those. So it's the under 65, 65 to 75, and then the 75 upwards. So it's those three age groups and 3 thresholds.
So pre-retirement, post-retirement, and then post what? Second retirement?
I really wanted to hear how you can tell that one.
You too, don't worry. Basic break.
Yeah. So on the first one, pre-retirement, under 65, if you earn an income below 87,000 rand, right? Pay your annual income. You don't have to pay income tax. So it's 87,000 rand. If you break it down, it's more or less 7,200 rand per month.
Okay.
You'll see it doesn't attract income tax there.
Okay.
And then the second age group, it will be your 65 to 75. Those are already in retirement. So SARS gave them a little bit of relief that if you're earning an income of 135,000 rand or less, you don't have to pay income tax.
Okay. That is a small relief.
Yes, it is. And then the last age group is 75 and older. Those ones, 151,000 rand.
Oh, wow.
Remember, those are annual incomes.
They're going to come and tax you as an friend. Interesting. So with the thresholds, is there anything else that affects them besides age?
No. It's
just your age.
It's just your age. It's just your age.
Okay. And I think that's very important for us to know, because I would guess that the majority of our attendees are in the pre-retirement category. So although I'm very happy to see if anybody wants to raise a hand and see if there's anybody older. But I think it's quite useful, because a lot of us do think, oh, well, if we're below the threshold, it'll be fine. But actually the threshold is lower than I think some people realize.
Yeah, it is.
Was that lowered recently, or was that?
So the thresholds, they're not fixed. So they change each and every year. So you find that the previous tax threshold was a bit lower or a bit higher. So it changes every year. That's why we keep our eyes glued when the minister is presenting his budget speech every year, because that's where we get to see it. Each and every financial year it changes.
Okay. It is very interesting, because I think for many of us who aren't the experts that you are, we think that a lot of the things or a lot of the directives that come from government are fixed. And they're not necessarily, they do have to adjust.
They are adjusted, yes.
So more reasons to watch the budget speech, in case you're wondering. So we talked a little bit about auto assessments just now, and the fact that they're one of the most, I think they're the things that are causing a degree of anxiety amongst certain people. And so what is an auto assessment exactly?
So an auto assessment, well, let's start with an assessment. What is an assessment to start with? So an assessment will be, remember when you're submitting a tax return, SARS will tell you that we have assessed you, we have reviewed your declaration, and this is the final result that we give you, right? So, they tell you that you either owe us or we owe you.
Yeah.
They tell you that in that form of the assessment, right?
Okay.
So now they are auto-assessing. With the advent of technology, SARS now has access to your information through third-party data. Most institutions, most companies, well, your employer will naturally submit to SARS. So
and your banks, like you were talking about earlier.
Your banks, your medical aids, your investment institutions, they will submit to SARS. So they will have those information. So now SARS doesn't need you to manually declare to them, but they will auto-assess you using information that they had at hand. Yes.
So can they assess you if you haven't submitted a return?
That's what they're doing now. That's what they're doing now. So most people, they've already been assessed. So most people have already been assessed. Most people have got SMSs and emails telling them that, you've been assessed. Yeah. But now, remember, that's information that SARS has at hand, right? Yeah. But now, there are other activities that you might have that are not necessarily reported to SARS, that you have to declare manually.
Oh yes, that's all the cash that one might earn from the side hustles,
or deductions that you might have for your contributions towards your medical aid out of pocket. Yeah. So that's why now it's not a final assessment. It's an auto assessment, but not a final assessment, subject to that 40 days.
40 days, yes. I think that 40-day period is really quite crucial, because I think, as we were saying just now, the fact that we do have a large number of the population that have adopted a little bit of a side hustle or an alternate means of income. It's definitely something that if one has forgotten to include that, you've got a 40-day leeway to ensure that it does get included or suffer the wrath of SARS.
You don't want that.
No.
You don't want that.
So obviously, our next question was actually going to be, is the tax return that I submit the only record that SARS receives? But obviously, you do get the third-party information from your bank and your medical aid.
So, that question is quite interesting, because I've seen in recent years, you've been investing for, since you started working, you've been saving. Now your savings, your interest now on your savings, it's quite a lot. Now I've seen people, I've seen people that try to hide that interest from SARS. Because remember, if it exceeds a certain exemption limit, then it gets taxable.
Yes.
Now people try to hide that from SARS because they don't want to be taxed on that. So now that question that you're asking, well, that's not the only information that SARS says. So SARS will have all these other information. So you can't hide. You can't hide.
You really can't hide. It's like, what's that song that's playing on the radio at the moment, that you can hide?
Yeah.
So sorry to everybody who's watching. So I think one of the last questions before we get into the kind of the person on the street questions was, do I pay tax in South Africa even if I'm a non-resident?
All right, so do I pay tax in South Africa even if I'm a non-resident? So remember, so the way the income tax is structured, South African residents, income tax residents, they are taxed on their world wage income, right? So regardless of where you earned your income, you're subjected to South African income tax. But now for non-residents, so the emphasis there is non-resident. Right? So it has nothing to do with citizenship. Tax residency. So if you're not a South African tax resident, yes, you are taxed on income that should end from a South African source. Right? So even if you're a tax resident in Australia, for instance, but if you earn an income here, then that income should be taxed, but it should be subject to international tax treaties.
Ooh, are those? Do they also have thresholds like we do?
No, it's up. They are there to avoid double taxation.
Well, that's a relief. Is it as much of a relief as I seem to think it is? I wonder.
There are a lot of technicalities there, so don't breathe sighs yet.
Well, so what in order to just kind of add a bit of extra value to the webinar, we did ask a couple of just sort of like random strangers in and around Joburg about what they would want to find out about SARS, and if they had the opportunity to ask a tax expert like Timbani for their own edification. Catherine says, how do I find out if I owe SARS money?
Well, you can't guess. You can't guess.
If only we could.
So the only way that you can find out if you owe SARS money, the first way, if we're focusing on this current tax year, is submitting a tax return. So remember, your tax return is a reconciliation of your annual earnings. So that's only then that you can know do I owe SARS for this current financial year or not. But previously, or if you want to your historic profile with SARS, then you have to request a statement of account that will have all your historic submissions and your current standing with SARS.
That's interesting, because what's quite interesting is that her partner, when I met them, Catherine's partner Tato was like, well, what if I owe SARS money, but I can't afford to pay them? What happens there?
Remember, we mentioned before that SARS is termed as a hungry lion that's after your money.
Yes.
But, well, they've made it easier because, well, we don't always have money to pay once, whatever they say we owe us. We owe them. So there are arrangements that can be made. So if you owe them money, I mean, there are a lot of people that also have a substantial amount of money. So you can make a payment arrangement. They call it a deferral arrangement.
Oh, that's okay.
So you pay it in installments, but it has to be reasonable installments based on your affordability. And one thing that you must keep in mind, if you owe SARS, you can't run away and wish that debt away. You have to be forthcoming with them, You have to engage them, acknowledge that you owe them and make those arrangements.
It is definitely something that kind of has to be done, because I think for many, I will not necessarily include myself in this, but for many of them who are slightly younger than me, coming out of school, going through varsity, there's this idea that like you'll get your first job, but nobody at your first job necessarily sits you down and says, we're going to have a discussion about how much tax you have to pay, and this is how it's going to work. So I personally actually almost wish that when I was starting my first job, there had been a degree of like, this is what this is, this is why this exists, and here is Timbani to explain all this. So,
if only we had that,
if only every high school graduate had access to tax advice. So Mo wants to know, what if I've never filed a tax return, and if I register now, am I in trouble?
So I'm assuming from what he says, if it says if I register now, he's not registered as a taxpayer already. So it's a good thing that he's considering registering now. You rather register now, and so that going forward it doesn't have trouble. But if he hasn't been registered, I would assume he was below the threshold, so you shouldn't really worry much. But now register on e-filing. You can check, a compliance profile that will give you a brief overview if you're in trouble or not. So you can have that overview of your current status or your standing with SARS. But If you register now, comply going forward, then you want to
That is good to know.
Yeah.
So I really hope you're watching. So, because I think it's quite difficult because obviously if you register, obviously then SARS is very aware of what you're doing.
Yes.
But if you don't register, would your employer register? Yeah, they would register you because that's how you get an IRP5, right?
So your employer should and would register you, right? Because remember, they shouldn't pay you without that tax number. And secondly, now that you raise it, it's a criminal offense. Failure to register as a taxpayer is a criminal offense that can land you in jail. So,
no.
So,
Please register today.
So if you're obligated to register as a taxpayer, you have to register as a taxpayer, failing which you'll be in trouble.
So how would one even get around that? I mean, if one has been employed by a legitimate employer, because obviously there are, of course, people who do employ other people under the table, and then they get around registering them for tax. But how would you as an individual in the employment world actually get around being registered? I mean,
so remember, it goes back to what we discussed earlier. You can do it yourself, right? Yeah, do it yourself on e-filing, register on e-filing, automatically get your tax number. Or, in most cases, you might think, I'm not registered as a taxpayer, only to find you are registered, but you just didn't know. Maybe your employer from 5 years back registered you, but you just didn't know.
And so which employers are automatically going to register you for? Because I know if you work for a government institution, I imagine you're not automatically registered. This is part of it's part of the system. But if you work for a private company that's based in a different country, are there sort of interesting dynamics there?
So you mentioned the 2 different employers there. So you have a private employer, a local employer. Well, you talked about legit and non-legit. If it's a legit employer who is registered for payroll taxes, they should register you without any hassles. Well, if it's a foreign employer, then there might be a problem because now you will have to do it yourself. Because they'll struggle to do it because their jurisdiction and all that stuff. So you have to do it this side. Interesting.
That's very interesting indeed, because one of the questions was actually about, let me just find it quick. Okay, we will get there. It's coming up shortly. It's Katlego, it's literally the next one. He wanted to know, what if you work for a company outside of South Africa?
Okay. So it's a broad question. So you're working for a company outside South Africa.
I think it was a remote work.
So again, it goes back to your gross income definition. So as a South African resident, if you're earning an income, regardless of where that source is, you are taxed. Remember, you're taxed on your worldwide income. Right? So your company, you're doing remote work in the US, for instance, or doing remote work in the UK, for instance. But that's worldwide income. So it's subject to income tax. It might be that because they are in the US or in the UK, they don't give you an IRP5. The mere fact that you earn an income, you now then have the responsibility to, on assessment, to declare that income to SARS.
So how do you do that without an IRP5? Is there an option available?
Yes. So I would expect that if you're earning that income, you keep records of your income as and when it comes in. So you will have to do a schedule of that income coming in, declare that income to SARS, manually declare that income to SARS.
So if you're
for the full year.
So if you're a remote employee, is that pay slips that you then need?
Yes, pay slip will be part of the substantiation.
Proof of that salary.
Yes.
And if you are a freelancer, would you then require your invoices and then the proof of payments?
Yes.
Okay. I think that might be quite helpful for many of us, because I know as part of the great side hustle kind of drive that was during that erupted during the pandemic, there are a lot of people who've taken on freelance contracts, and of course, and you bill by hour. So all of those billable hours add up, and they sadly are taxable. You've heard it from the horse's mouth.
But you know what, before we move on from that, on that question from Katlego, there are other individuals that are employed, they might be employed in the UAE, in the UK, but now they reside there as well. So you find that, you go to work in the UK for 6 months or so, right? Come back and work again for the remaining half of the year. So now there's tax treatment of that income. It's quite different from when you were here. So it's quite interesting if people can just keep that in mind, that there are exemptions in place for income earned outside of the country if you were residing outside of the country.
So what are those exemptions?
So before 2020, you could exempt even if you're earning 2 million outside the country, you could exempt the full amount. Right? But now they amended that post 2020.
Of course they did. 100 caterpillar.
So the Income Tax Act, Section 10, Section 10.1, Section 2, it sets out a limit of 1.25 million per year, right? And the conditions that should be in place for you to qualify for that exemption. So you would have to be outside of the country for at least six months, right, consecutively. And well, it's quite tedious, but you qualify for that exemption if you are residing out of the country, earning income out of from foreign source.
Okay, I think that is. Thank you so much for adding that, because there are obviously many of us who have had to work overseas, or especially during lockdown, where families were stuck. People who had been working ended up being stuck where they'd been posted. So it's probably just as well, because I think a lot of us are only returning. I say us, general tax community, are only returning now with opening up of borders and things. So
now that things are getting back to normal.
Yeah, and we can have our webinar in close proximity. So thank you very much. That was incredibly valuable. Sia, what if I'm unemployed? Do I have to tell SARS?
So you don't really have to, but again, remember the question that you asked me, do I have to submit a tax return? It still goes back to that. If Sia was, say, employed last year, now for this current year, he's not employed, he's unemployed. And then the following year, he gets employed again, gets employment. Now there's that break of that 1 year where he didn't submit a tax return. The following year, he submits a tax return. SARS will come back and say, but 2021, you didn't submit a tax return.
Where do you mean?
Yeah, so rather submit a tax return. Even if you're not employed, you can submit a nil return. You don't have anything to lose.
So that's what it's called. It's called a nil return.
Yeah.
Do you get to indicate that it's a nil return when you submit it, or is it up to SARS to decide that it's a nil return?
He's asking if I'm unemployed.
Yeah.
So when you submit your tax return, SARS will ask you that question as well, just like he asked now. So if he was unemployed, you inform SARS, just like that.
Brilliant.
Yeah, so you shouldn't just let it be, because it doesn't have to. You shouldn't just let it, but rather just for continuity submit. Yeah. Because remember, sorry. So I was about to say, I gave the analogy of him, breaking 1 year in employment and then getting employment. Let's say in the coming year, he gets employed, he submits a return, he's got a refund. SARS won't pay his refund because of the outstanding return, even if he wasn't unemployed.
And we are all very attached to the ideas of getting our SARS refunds. So anything that could possibly interfere with that, you would want to make sure that that's done. I think currently at least, the two main takeaways from this talk is very much SARS is a very hungry caterpillar with claws, and don't leave it. You can't hide.
You can't hide.
So Khaleesi from Bayes Modea, what do I do if my boss won't give me an IRP5?
But why? Why won't your boss give you an IRP5?
I think this is very much a case of not being a fully legal employee.
Yeah, so it's just that, remember, you said, those employees, employers, legit employers, and
legit
some employers. So we've had cases, numerous cases of people that, each and every month, pay-as-you-earn is deducted from their salaries.
Yeah.
But when it comes to assessment time, the employers they don't want to give them their IRP5s.
Yeah.
So, that should raise eyebrows. Now, why though? So it should tell you that there's something going on there that shouldn't be going on. So if your employer doesn't want to give you an IRP5, well, by law, they should give you IRP5 if they were deducting income tax. They should give you. So one reason that I think of that, they wouldn't want to give you an IRP5 is if they were deducting your pay as you earn, but not paying over to SARS. So they know that should I give him these IRP5, then you go to SARS, but now then it's a fraud case. Yeah, so they should give you an IRP5. If they don't want to give you an IRP5, you can either report that, SARS fraud division, you can get assistance from us.
That's good.
If it's really fraud, you can open a case with the SAPS.
Yeah, I think that's very important because it is an incredibly frustrating position to be in when you're actually trying to be a good South African citizen, you're trying to pay your taxes, and there's something standing in the way. And I think for a lot of people, if you feel like your job is going to be threatened by asking too many times for an IRP5 that someone doesn't want to give, it's good to know that as much as SARS may be a hungry caterpillar, they are also there and have your back. So I think that is obviously one of the things that we do also pay taxes for, is that there is a degree of security that comes with that, which is very important for us to feel in our lives. Ray, who do you ask for tax help? If you're not, of course, one of our clients.
So, well, if you're not one of our clients, there are tax practitioners and accountants out there that assist with tax compliance and assisting you with your tax affairs. Yeah. But now you have to be very careful. Yeah. Because there are a lot of people out there that are saying we assist with this, promising huge refunds, right? Yeah. So you have to be very careful. One is the person that I'm seeking assistance from are the registered practitioners. Yeah. Remember, as a tax practitioner, I have to be registered. I have to be regulated, right? So you have to find out, is that person registered with SARS? Is that person regulated? There are regulatory boards that we fall under. So is that person regulated? Is that person, do they know what they're doing?
That's important. That's a very important question.
Yes, in as much as you seek assistance from a third party, when something goes wrong, SARS goes back to you as the taxpayer. So you have to be very, very, very careful.
I think that is such a crucial point, because for many of us, I think we would like to, or at least we really like to be able to shift the blame or to be able to shift the responsibility to either the employer or to SARS themselves, or to the fact that we didn't have necessarily the advice or the information that we needed. But the fact is that as far as SARS is concerned, it is our responsibility in the end to ensure that we are compliant.
The onus is on you.
Yeah, but that word we would like to not use, onus. It's not worth it. I'm just checking on our Facebook people as well, see if there are any questions. So let's have a squiz, because we've got 15 minutes left. We don't want to. No questions so far. It's always interesting. But so Namfundo, she wants to know, how much tax does she actually pay? Is there a formula? Is there a
That's one question I won't be able to answer, unfortunately. Because remember, unfortunately, I don't know Namfundo's situation. Yeah. We are taxed on a sliding scale. Yeah. So it's all dependent on how much she earns. So it will all be determined by that sliding scale. Yeah. All dependent on how much you earn. So there's no fixed rate that if you're 30 years, or if you have 2 kids, and if you're married, then you're taxed this much. No. It's all dependent on your your affairs. So depending on how much she earns, then well, if this was a one-on-one, then I'll be able to answer that. But no.
I think that's obviously something that a lot of people want to know is they don't necessarily want to attract the attention of SARS because they don't know how much money they're going to actually have to pay. And obviously, and you do just have to pay it, sadly. And luckily, as you said, there are payment plans available. You can apply for a deferral, but it is just a worry that I think is uppermost on many South Africans' minds, particularly in the economy as it is now, is what if I register or what if I submit a return and I get assessed and I get told I have to pay an incredible amount of money and I simply do not have the resources.
The good thing is that most employees now, you really shouldn't have that fear. It's not like the old days. Now, most employers, they rarely get it wrong. Accounting systems that are in place now, most employers, they get it right. So it's rarely that you get in a situation where the employer undertakes you or takes you wrongly and you now all start. So you shouldn't have that fear.
Okay, I think that is a nice thing to hear for a lot of South Africans, and I really do hope that there are channels actually where that is something that can be made more public, because obviously we've got a lot of wonderfully, thank you so much for attending, by the way, tax compliance citizens who are our clients and who have access to our tax experts like you and your advice. But I think it can be quite intimidating for people who maybe don't have that access to advice or necessarily that access to information to go, I keep hearing about having to pay tax, and I think the main word we hear there is pay.
It's pay, yeah.
So, I think a lot of us now, post petrol price, post everything, every time we hear the word pay, there's that slight little twitch. Like, what now? But and then Reese would like to know, how does tax work if I receive income from two different sources?
Okay, so that's a good question, because we have had a lot of people, struggling with that. As you say, because of our current situation, current economic situation, people always find ways to make an extra cash if they can. So you find people. We have this issue mostly with people in the health sector, nurses and doctors. They are the most impacted because they have this thing called moonlighting. So you will find that they work at, say, 3 or 4 or 5 places in a month. So unfortunately, in as much as they get extra cash, but now they find themselves in a difficult situation at SARS, because the way the income tax is structured, such that you as the employer one, and employer two, employer one will tax you individually. The focus is on the individual's, your individual salary. Right? With employer two, they will tax you again correctly. The focus will be on the individual salary that you're earning from that employer. But now, on assessment, SARS will add all those different incomes together, right? Now they take you to a higher tax bracket. In as much as you are taxed correctly by your individual employers, but on assessment, you will also. That's
definitely something to be aware of.
So in most cases, people that earn more than one income, you'll find that they also. So that's why it's very important before you decide to do that, speak to an advisor. Because there are ways that you can, go around that. You can apply for directives that, wherever you're going, they tax you higher to compensate for that shortfall. So it's always important to talk to an advisor before you take up second employment.
Is that something that where you would recommend them being a provisional taxpayer?
Yes. By definition, a provisional taxpayer is someone who earns income from more than one source. So you would have to be a provisional taxpayer. But even if you're not a provisional taxpayer, you can, as I've said, go around that, But it's always important for you to talk to an advisor who would advise you.
I think that is an incredibly astute question, because for so many of us, as we said, there are multiple sources of income. So, and I had not thought of that at all, is the fact that even if your employer has taxed you correctly or employers separately have taxed you correctly, that combined income will then put you in that higher tax bracket.
Yeah, it's true, unfortunately. But now, another interesting development recently, we have had this issue with the pensioners. We find that someone was married, right? And then the partner died. Now they get a widow's pension.
Oh, okay.
Or they resigned or retired from wherever they're working, but still working somewhere else. Right? SARS now, most of those individuals were owing SARS because of that additional pension.
Yeah.
But what SARS has done recently, they've introduced a system where they, give out a tax directive to whoever is paying that pension to tax that pension at a higher rate to compensate for that shortfall.
But it's a pension.
So, in as much as it is a pension, but remember on assessment you would owe SARS. So they're trying to mitigate that situation. So it's good news to those pensioners, really, because they were in a difficult situation.
Yeah, that is incredibly interesting. And I think a lot of people, the misconception is that, oh, well, once I get my pension, SARS won't care. No, they won't. That caterpillar again. I think we're going to have to get T-shirts printed with a caterpillar. It's going to be the new tax logo.
Okay, so I can raise those.
I'd love to know what kind of a butterfly comes out of that. But there is another question from Darren. So, why shouldn't I just submit my return myself? Is it really difficult?
Wow. Why shouldn't you submit your return yourself? You can submit your return yourself. You can do that. But you can do that if you know what you're doing. The reason why I'm saying if you know what you're doing, because mistakes now, they are costly.
Yes.
They're so costly such that they can land you in deep trouble.
Yeah.
Deep trouble, deeper than you can even imagine. They can land you in prison. Remember,
that's scary.
Previously, SARS would, before they institute any, punishment for a mistake, they would try to assess if you're negligent or if you had an intention to,
Yeah, so if it was an accident versus deliberate dissembling,
then they can let you go. But now they've amended that. Now they don't need any intention. Now they're ignoring negligence.
Wow.
So those mistakes, however small, might land you in trouble. Failure to change an address is a punishable offense.
Failure to change an address is a punishable offense.
So
just let that sink in.
If that's a punishable offense, you can imagine when it comes to figures. So in as much as
if there was any figure on the return that you hope was a mess, you'd hope it was the address.
So you can imagine, yes, you can do it yourself, but
wouldn't recommend it.
If unless you know what you're doing, but if you have someone you trust, an advisor, rather let them handle your affairs.
I think that's really key because obviously SARS has done its best to make sure that it is as easy as possible to submit, and specifically via e-filing. I mean, we did hear earlier that they were helping you register for e-filing in the branch. But as long as you are entirely comfortable with every single aspect of what you have to include when you file your return, I mean, there's that entire list of things that go with your tax return if you're trying to claim for anything. Ensuring that anything that you are claiming for, that the figures are correct, that you have the correct documentation that goes with it, and then of course making sure that it gets in on time.
Yes.
So that's a lot. So we are 4 minutes towards the end. I'm hoping to see a comment. They're not loading. Seko Matabula and Dangeka Chio, I'm so sorry, the comments on Facebook are not loading. Please feel free to drop us an inbox message unless we have actually managed to answer your questions already. And if anybody does have further questions, please do either drop us a message on Facebook or send us a tweet, or you can drop us an email and info@legalandtax.co.za. And it has been an absolute pleasure actually to have all of you here. I think most of you stayed throughout the entire webinar, so thank you so very much.